place in the quarter? And more importantly, what's the outlook for quarter one of FY27 and overall new financial year? We have Mr. Manmohan Sharma, the CFO at Waaree Renewable Tech, joining us on the show. Mr. Sharma, good morning and thanks for your time. Now let's talk about your earnings. Given the significant surge in quarter four top line and your bottom line, both on the sequential and year-on-year basis, if you could help us understand how sustainable is this high rate of growth in the immediate term and what specific drivers will ensure that this trajectory continues well into FY27 as well.
If you see that our overall performance over the last few years, in fact quarters, so we are growing company continuously and we have doubled our revenue and the EBITDA also we have doubled. So going forward also with the strong unexecuted order book as of now we are firm that we will be able to continue and sustain this kind of business going forward as well.
And Mr. Sharma, there has also been a significant surge in the cost of EPC contract in the quarter gone by. Can you take us through what led to that and if the increase is reversible in the next quarter?
So if you see that my cost is also in line with the revenue in terms, it has gone in the proportionate to my revenue. So mostly what we are doing, whenever we are negotiating any contract, simultaneously we are also fixing our raw material or the COGS component. That also we negotiate simultaneously so that our margin remains intact as well as because there could be escalations in the prices. But whenever we are doing the costing, that time we consider all kind of factors which are likely increase inflation, etc. So those factors are considered while doing the costing or therefore we keep this kind of margin. So we consider all kind of facts in this.
Okay, understood. Mr. Sharma, if you could also give us an insight on how your contracts are structured, because we are seeing increase in the raw material cost. If you could help us, if this increase in raw material cost will get passed on to the final consumer basis, how the contracts are structured?
So mostly our contracts are the fixed price contracts, unless there is a change in the design or the scope of the work. Where we have to do extra work or maybe some design change, we will be doing extra work. So those things are where there is a upside on the revenue side also. As far as the costs are concerned, it is not a pass through. We have the fixed price contract and over a period of time we have to execute those contracts. But the how we are functioning is like the strong order book which we carry and the cost optimization exercise which we keeps on doing on a quarter-on-quarter basis, and it's a routine. So with the tight financing control and monitoring these projects on a real-time basis, definitely we are able to achieve and control our costs.
And Mr. Sharma, company had guided for EBITDA margin levels of more than 15%. The company has successfully been able to meet this guidance, but if you look at the numbers on a sequential and on a year-on-year basis, margins have contracted. What are the key drivers behind this contraction in margins YOY, and what is the outlook going forward when it comes to margins?
Actually, the margin for the quarterly basis is based on which contract we are executing on the quarterly basis, means which type of contract work which you are doing for the specific customer requirement. So that is the key for that particular quarter. But if we see the overall for the full financial year, we have achieved more than 19% of EBITDA margin and revenue of 3,331 crores. So on an overall basis, if we see, and if you compare with my last quarter also of December 25, we have improved slightly on from the last quarter. But overall basis, if you see that we have maintained more than 19% EBITDA margin.
Understood, sir. And is it the case that the large-scale utility projects have lower margins? Is that why the margins have been impacted this time?
No, it's depend on what kind of contract with geographically as well as scale what we are doing as of now. But more or less, we try to maintain this same kind of margin in various contracts. It may be very few basis point here and there, but mostly we are like when we start, we do some costing and risk reward metrics. Then going forward also, we keep on reviewing all these factor parameters on the monthly or even maybe a day, it means a weekly basis. So any kind of change, any kind of situational change, maybe where this margin or maybe the costing comes into the play. So with all tight financial controlling and real-time monitoring of these projects, we are able to achieve this margin.
Right, so that's as far as margins are concerned. But Mr. Sharma, also wanted your thoughts on the current order book position and the timeline of execution. Given the order book that you're sitting with, what will the timeline look like?
Whatever the 2.8 gigawatt of unexecuted order we have as of now, so it's to be executed over next 12 to 15 months. So and whatever order we are getting, because it's now we are what the scale has gone up, we are doing 2 gigawatt of order, 1 gigawatt of order. So scale has gone up. So it takes around 12 to 15 months for us to complete these kind of orders. Moreover, this for the going quarters also, if you see the this progress over a quarter basis, will try to maintain the same kind of like growth going forward as well. But it's like depend upon how much order we get during this financial year, this running financial year.
Okay, and on that note, can you throw some light on your prospective order pipeline?
If you see that if you see that we are already doing 36 gigawatt of following the order pipeline, 36 gigawatt of order pipeline, and these are some of them are tender, some of them are international also. So we are actively looking any kind of order which are available from the tender or maybe from the domestic bilateral contract. These kind of the pipeline, any opportunity if at all we get in the international market also, that also we are actively exploring. So we at this stage it is difficult to comment how much order will come from which sector, segment and geography. Let us see during this financial year.
And Mr. Sharma, are there any supply chain bottlenecks for critical components, especially modules and trackers, that could delay project commissioning in the first half of FY27?
No, actually, if you see that we are, as of now, we are totally dependent on, we are the domestic EPC company, and our sourcing is also fully dependent on the domestic supply chain. So as of now, we are doing that only because entire is domestic orders and supply chain is also domestically, unless some component which are specific requirement of the customer to be imported. So and further, whenever we move to the, let us say, if at all into the international market, that time we will see that if the supply chain, how we will be able to manage that also, we have plans, but let's see, sir.
Okay, and lastly, if you could help us understand your plans going ahead, because the company has further expanded into the BESS and data center segments. How does the growth prospect look in these segments? If you could just throw some color over there.
As of now, the company is into three segments that I mentioned. That one is EPC, other one is O&M, and then our own IPP project. So these are the three revenue stream for this company as of now. But definitely, we are actively looking any kind of opportunity in terms of EPC. Of the best EPC as of now, we are doing maybe relatively not that significant as compared to my EPC solar power, but that also we are undertaking, and we are actively doing this base orders also, as well as any kind of this data center opportunity. So that also we are looking very actively. So probably during this financial year, I will be able to give you some detail of that.
Okay, so that's as far as the outlook is concerned. But Mr. Sharma, thank you so much for taking your time out and joining us here on ET Now and helping us understand what Q4 look like and what the outlook is for the first half of FY27. Thanks so much for joining us today. But that's all the time we have on this edition of the show. Thanks so much for tuning in. Bye now, sell now. Welcome up.